Welcome, broker family. We've got a special one today. As unless you've been living under a complete rock, you will recognize the name behind this handsome young gentleman to the side of me, Tony Hutchinson. VantageScore is coming, and it's coming, and it's a good thing for the industry. It's a good thing for consumers, and it's time to get educated on it. And the sooner that you understand this and are able to better serve your borrowers, the more of a competitive advantage you're going to be at. So we're going to be doing a couple conversations about Vantage, and no better place to start than with Vantage. So, thank you, Tony. Tony's EVP over at VantageScore, and we appreciate you having us on, or we appreciate you coming on.
No worries, Brendan. No worries. Hey, it's great to be here. We're extremely excited about the opportunity that this provides. We've been working forward for a while. I know that there are a lot of people who don't know much about VantageScore and have a lot of questions specifically about the implementation in the mortgage space. But I figure I would just start at the beginning and just give you guys like a brief overview of who we are and what we've been doing in the last year or so in terms of our growth. I think that's a really good place to start. What do you think, Brendan?
Yeah, start there, because like I was telling you beforehand, like a lot of brokers, and at one point I was in this camp too. They know that Vantage is a different scoring model. They've known it's kind of been coming, and now it's suddenly here. And now it's like, okay, well, what the hell is it really like? How are we going to use this thing? Why is this a good thing? So yeah, man, fire away. But tell the story's amazing too. Tell the story for sure.
Yeah, so VantageScore has been around since 2006. The company was a project of the three credit reporting companies, TransUnion, Equifax, and Experian. They wanted to build a score that could compete with FICO in the marketplace, and this was in all of the marketplaces. Of course, in 2006, we had VantageScore 1, and we've gone through a number of different versions. Right now, we have VantageScore 4, and that's the product that is authorized by FHFA for mortgages in the conventional conforming space. Now, the thing to recognize is VantageScore 4.0 has been in the market since 2017. Not in the mortgage market, but definitely in the auto, personal loan, and credit card space. And it is the first credit score model to use and incorporate trended data in the algorithm. That's the real secret in the sauce. And that's why FHFA wants to move to these new models. It is the trended data aspect of it that makes it really unique. And we'll talk a little bit more about that later. But just to give you like kind of a rundown of who is using us, 8 out of the top 10 U.S. banks already use us in some format. Again, they're using us in the credit card space, auto lending space, personal loan space. Some folks are using us in the HELOC space or any of the non-conforming space. So you have that. And about 3,400, actually, I apologize, 3,700 financial institutions, so other fintechs are using VantageScore. 9 out of the top 10 largest financials come to us monthly and get a report from us called Credit Gauge, which we put out on a monthly basis that talks about the health of the consumer. And by the way, all of you on this phone can get that on this line can get that as well by going to VantageScore.com, going to Credit Gauge, and signing up to receive it. Last year, just to kind of give you a sense of how big we are, we had 42 billion Vantage scores pulled and used in the market in 2024 alone. That was a 55% increase over 2023. Only 220 million of that went to consumers who were looking to find their score. So these are scores being used in business. And oh, by the way, are investors using it? Yes. $13.4 billion of ABS, so asset-backed securities, not the residential mortgage-backed securities, but asset-backed securities had a VantageScore associated with it. So we've been seeing some significant growth.
Let me ask you a question on something you said. So you said that your Vantage uses trended data. I know what at least I think I know what trended data means. But the way you said it gives me pause. Can you explain what trended data is and why it's important? And I'm going to have some more follow-up questions on that. Yeah.
Hey, no worries. So right now, the classic scores look at a consumer at point in time. So what have they done to this point in time? What has Brendan done in terms of payments? And based on where you are today, we're going to predict how far in the future potentially you are going to become delinquent. We don't look at you at a point in time, so just today. We take a look back over a 24-month period to see what that trend looks like in terms of how you've made your payments. And we predict over the next 24 months when you're going to go delinquent. Now, this does a number of things. It takes into consideration how your payments have changed. So you may have had a blip early on in that and recovered. You're going to get some credit for that. You could have been very high and are slowly creeping down, and we're going to take that into consideration. Or you could continue to just pay as you have been, and we'll take that into consideration. But it's really a more holistic look. The other thing is, because we're looking at you over a longer period of time, we're able to now really apply the algorithm to people who don't have as thick of a file as the competitor score requires in order to come up with a score. Between the trended data and then additional information that we pull, which everybody calls alternative data, that's in the credit report, we're really able to score more people. So we've got rental payments when they're included are included in our algorithm. We've got telecommunications and utilities payments. Those are in the credit report. We include that in our algorithm. So we're really trying to get at what are the drivers of the new economy so that we can better score people and give financial institutions a really good holistic look at the consumer.
So good news. I did know what trended data meant, and I still feel that I did. Because when I pull a credit report, I can see the trended data on there, and I recognize there's a difference between like what the credit bureaus are reporting and what, in this case, FICO is using for its scoring model. I just assumed that trended data played a big factor in their scoring model, but it sounds like it doesn't, at least not to the degree that I was expecting. And you guys have really nailed that equation. So
that would be correct. So, the one thing I will say is the new models that FHFA wants to employ in the conventional conforming space are all trended data models.
Okay.
The only one that's ready to go right now, at least because the data has been released for the public to review, is VantageScore 4.0. We're still waiting for the trended product from our competitor to have its data released, which we think is necessary because we want people to be able to evaluate them both. And the one thing that you would have heard from Director Pulte over the better part of the last 2.5 weeks is he wants true competition in this marketplace. And we look at that and say, yes, let's have true competition. We believe true competition makes us better. There are going to be things that we do very well that our competitor doesn't. There may be things that they do better than us. But at the end of the day, that's going to elevate both of us. Those outcomes mean a stronger mortgage market, a more liquid mortgage market, because the investors will see the strength and the information and flow more monies in there, and more opportunity for consumers in the marketplace, in particular those that have not been scored to this point. And just to make a point, we score 33 million more consumers than the current score in the marketplace.
So you're saying that like there's 33 million people out there that if they tried to pull a FICO score, that just nothing would come back and you would report a score on them.
That's correct. Our competitors doesn't have them scored, but we do score them.
Okay, so I have a more specific question on that topic, but before I do, I should have said this as a jump. If you got questions, drop them in there. There's a saying out there that I think gets overused a little bit. There are no stupid questions. There are definitely sometimes stupid questions, but not on this topic. This is new to everybody. I just lost confidence in whether I knew what trended data was or not. So let it rip. Fire away the questions, and that's what we have the experts here for. So I want to ask a question about, and it's going to be hard to answer precisely, but when I have access to Vantage, which we'll talk about implementation timelines in a moment, but when I have access to an originator, we certainly aren't looking to prejudge people in general, but if you can categorize the types of consumers that I should have top of mind for Vantage, that Vantage might perform particularly well for them, or phrasing it that way, or that have been because credit score at the end of the day, it's supposed to be a predictor of risk, right? Or an indicator of risk.
That's right.
And are there particular types of consumers that you feel were misrepresented under previous models that Vantage helps? And then on the flip side, do you think there's some borrowers that maybe FICO makes it look like they're a little more, a little safer than they actually are, and Vantage might actually have lower scores for them retrospectively?
Yeah, and thank you for the questions. The second one I can't answer because we have no access to our competitors' credit scores, and we've not been able to do any analysis on their scores, so we don't know that. But what I can tell you is for VantageScore, we're going to empower people who are new to credit. So just slightly less than 6 months of credit history. We're going to empower folks who have decided that they don't need to use credit as often as they have in the past. So they might have gone dormant on their credit usage because they decided, we've paid off our car, our mortgage is already paid off, and we're only going to use credit sporadically. So those people get a score. And then I mentioned a little bit earlier, these people with thinner files. So because we're able to go deeper, our algorithm goes deeper into the credit report, and we've got that period of time that we're looking at, we're able to score them. So that's really the three buckets of people. Now, what I will tell you is we have a product on our webpage called Inclusion 360. And everything that I talk about on our webpage is free. So Inclusion 360, you can go there right now, VantageScore.com, click on Digital Tools. There will be 4 tools that pop up. The first one is Inclusion 360. You can go into a geography and see where the newly scored people are, the newly Vantage scored consumers are. And the one thing I will tell you is they're everywhere. They're all throughout the United States. There's a good concentration going down the East Coast through Appalachia into the Midwest. There are obviously populations in urban areas, but rural markets have a plethora of the newly scored as well. So these are people from all walks of life, all demographic cohorts throughout every geography in the country, and you can find them. And again, it's 33 million people who our competitor has not scored.
And every originator listening just heard that and said, well, that sounds like a roadmap for where I should be marketing. And there's some potential homeowners that don't think they can become homeowners right now once we get access to it.
That's true. The one thing I will tell you is, and a lot of people, when they think of VantageScore, and I know that folks try to harp on this, they're like, okay, we were scoring people who have thin files, and maybe you're giving them scores that are beneficial versus what they should have. I'm going to tell you, so the 33 million more people that we score run the gamut of the credit spectrum. So about 13 million of those folks would have a Vantage score of 620 or higher. So the other ones are going to be folks that to this point haven't had credit or have bad credit and need to improve it. But the value is they now know what their credit score is. So instead of going in blind, having no score and being charged the highest rate on products, now they can get their Vantage score. Some people will find, hey, I'm in the prime market. That's great. Yeah. Now I can save money and take advantage and actually maybe get a conventional conforming loan, right? Conforming mortgage loan. Other people are going to look and say, okay, I've got a bad score, but now instead of me being hit with the highest cost, I'm going to be hit with a cost, but it's not going to be that high. And I can make a decision for myself. Am I going to pursue this at this time, at this cost, or am I going to improve my score? And that's really what we're out here trying to do.
I love it. And like this audience, I'm sure you've been fighting for this for years, and your predisposition to beat back on some of the objections. You're not going to hear them from this audience. Like, it is not news to a single mortgage broker in the country that there have been there's significant room for improvement in the credit scoring game, or however you want it to phrase it. And we have looked at borrowers and even looked at their reports, and we just put ourselves blind to the score and been like, this is somebody that should be able to qualify for a mortgage, and they couldn't. And I don't want to say Vantage is going to be the solution for every single one of those consumers, but it will be for some. It absolutely will be for some. And I want to specific question. If you don't know the answer to this, this is okay. It's a very nuanced one out of left field, but like something that drives me nuts as a professional and drives consumer nuts is when either they pay off a credit card and it's like they've been working forever and then they close it and their score drops as a result, which is not logical. Like from a risk standpoint, it's like I lose points for not having access to credit. Does Vantage look at a situation like that differently?
Well, that's where the trended data comes in. Because you would have paid it off, but we would have seen, and this is where the risk comes in. How are you doing making those payments?
And they were nailing it, obviously, in the situation I just described.
Exactly.
Okay.
I mean, that's exactly. There are a lot of folks who fit into that boat who have been great making their payments. They pay off their credit. They stop using credit because they have found themselves on solid footing financially, something that we preach to them all the time. And then when they want to go out and they need to make a purchase and they need credit, they're getting dinged because they haven't used anything in the past. Trended data can remove a lot of that.
I love it. I'm like sick of advising clients where it's like, well, I only use this one credit card and you don't even have to close it. If you just don't use it for 3 months, it removes itself from the scoring model. And I'm like, this is encouraging potentially irresponsible credit. Like you start using 3 credit cards instead of 1. That's not like good financial advice. So why if you're just gaming a system and it's silly. So I'm really happy to hear that Vantage is addressing that in a way that makes sense. I love it.
One of the things I'll tell you is and I've worked for both Fannie Mae and Freddie Mac, and I've got about 20 years together with them. And I know that for years, both entities tried to find, additional information that they could use to better predict scoring, because, credit scores are used around pricing and they have their own models. Well, a lot of what we incorporate into our score, specifically that rental piece, are things that Fannie Mae and Freddie Mac are looking to incorporate. And the reason is because it's a better predictor of a consumer's ability to repay, specifically on a mortgage. So that is, one of the big advantages of allowing competition in this space is you're always trying to innovate and make the algorithm better. And that's one thing that we've done. We scrub the data set all the time. And just so you know, VantageScore 4.0 is not the only score that we're putting out in the marketplace. We continue to innovate. And outside of mortgages, because VantageScore 4.0 has only been authorized for conventional conforming mortgages by FHFA. But that doesn't stop us from trying to improve and come up with product that will better assess the consumer. And if you pay attention to us, if you follow us on LinkedIn, if you follow us on any of our platforms, you will stay in touch and see a lot of that progress and change. We don't stop innovating.
Dude, hell yeah. So you've mentioned a couple times the fact that you take rental history into account in the scoring model. And this is no BS, right? Like we're all aware of like different marketing campaigns that said they do and this and that, and they don't actually do it. And you guys do, which is amazing because like, honestly, if I can make my rent payment, why can't I make a mortgage payment? That's like a very simple argument that's not surface level. Like it's a legitimate argument. Now, if your mortgage payment is 3 times what your rental payment is, that's a little different, but like it matters. Now, can you talk a little bit more about that? But what I also want to know is like, I saw a statistic recently that only 10% of landlords are reporting currently to Vantage. Are there any plans to get that number up?
It's not to Vantage VantageScore that they are reporting. They're reporting to the credit reporting companies.
Of course, I'm sorry.
We're scrubbing the credit reporting companies' databases. And just a small nuance to share right now, we have the same algorithm at each of the credit reporting companies. So you're going to find that our scores are going to be pretty much on top of one another coming from either one of those, because we make sure that we're getting the same information.
Unless they're reporting data differently, but yes.
Unless they're reporting data differently. And we try to optimize so that we are kind of not letting some of that slip. But the one thing I will say is the credit reporting companies are trying to get more rental data in. We are working with companies to drive more of that, as are Fannie Mae and Freddie Mac, through partnerships with companies that are incentivizing smaller mom and pop renters to be able to deliver their rental information, and the consumer to do the same thing. Because we've seen the power of rental data, we definitely want more of it in, and we are supporting every effort out there to get more of that into the credit report so that we can score more consumers on it.
Let me ask this question. So if, because this is a scenario that's going to happen. I have a borrower come to me, Vantage, FICO, both, like, we're not quite where we need to be, but they've been paying rate on time forever, and we want to get that rental history reporting. Is that a process where, like, I can be like, okay, get your landlord this link, and here's what they need to do, and the lifting's relatively minimal, and the historical rent should be reporting in a month or two or whatever timeline? Or do you know how the actual nitty-gritty implementation in a live scenario would work like that?
So I don't have that off the top of my head. So that's number one. But what I would say is, if they know the credit reporting company that they work with the most, I would contact them, because I know that they have a conduit for it, and they have relationships with a number of these different national rental reporting companies. So organizations like Isuzu that are out there that are helping to gather this information.
Okay.
So if you were to go to the customer support lines of any of the three credit reporting companies and ask them about how you can get your
Okay.
rental, they are the ones who can instruct you on that. So,
and as we get that stuff, we'll get that out more and more to the broker community. But
yeah,
to your point, like, even small landlords should have something, because at a certain point they might have to file a judgment or a collection against, and that goes to the bureaus too in a negative way. But now they can use those same relationships they would use to do that in a positive way.
Exactly.
Okay, cool. So before we let you go, you said that you could give us an exact timeline on when all this is going to be available. Is that right?
Now you're trying to make me make policy, and I don't think Director Pulte would want me to do that.
No. We're just trying to go viral. There you go. But whatever you can share on what you're hearing, and we're not going to hold you to any of it, but where should our heads be at?
So I will tell you this: the FHFA, specifically driven by Director Bill Pulte, wants this done as soon as possible, and they're really driving the train on this. Working with Fannie Mae and Freddie Mac to get this done. They'd like to see it in short order. They haven't given a specific timeline, but I can tell you that both Fannie Mae and Freddie Mac are furiously working to ensure that their systems can digest a VantageScore. And since the director came out on July 8th and said that he wanted it to take immediate effect, they have really gone into overdrive. But not just them. The LOS providers, different mortgage originators are out there working as hard as they can as well. We're very happy to see that. We are providing as much information as possible and support as possible to people in the marketplace. A lot of people have come out the woodwork recently that we had been, we were talking to, that thought, okay, this is not something that's going to happen anytime soon. And though we were telling them that we thought it was going to happen this year, a lot of people didn't listen. Now they're coming back and saying, hey, look, you were right. Can you help us? And we're like, you know what? Don't worry about telling us we were right. That's neither here nor there. We want to help you get this product out into the market so that all of your clients can take advantage of it, and the industry can get the competition that it has desired for a long time.
100%. And to clarify a few things that Tony said for the audience. So Director Pulte, he is, the big boss over at FHFA. FHFA regulates Fannie Mae and Freddie Mac, right? Who are in conservatorship, but technically, publicly traded companies right now. Director Pulte is also the chairman of the board of both Fannie Mae and Freddie Mac too, correct? Did I get those titles right?
Absolutely right.
He's the boss over there too. So, and that is on the government side of things. And we've had conversations, the BAC has, with both FHFA and Fannie Mae, not Freddie Mac yet, but they're on it. And so step one is for them to be ready, both other things, but most specifically with releasing loan level pricing adjustments for Vantage. Also, there might need to be some coding changes with DU and LP. But I think minimal. I say that as somebody that's not capable of doing any coding whatsoever. But So that's on the government side. On the industry side, Tony referenced a couple of them. You're talking about credit report providers, so think Advantage or CIC, companies like that. They seem pretty ready. They're looking for a little guidance, but they seem pretty ready. Technology companies, so think Arrive and LendingPad. Speaking to Arrive, they seem pretty ready. And now lenders, it's going to be hit or miss. But as some of you have heard me say before, and I was telling Tony before, one of the advantages of being a mortgage brokers is we only need one lender to offer something, whether it's a jumbo product or a non-QM product or a credit scoring option. We just need one to have access to it. And our competition might need their place of employment to have access to it. So we could have a window of time, maybe not, where we have a competitive advantage, which is all the more reason that we need to be all over this as brokers. We need to be educated about it. We need to be educating our consumers. And use this to help as many people as possible. But I'm stoked. Hopefully you can tell. But Tony, is there anything you want to share with the audience before we let you go?
The only thing I'll say is please hit our website. We've got a lot of resources there. Again, all of it's free. VantageScore.com. Go there. If you have questions, we have ways to reach out to us directly via the website. Please reach out to us with questions. We'll do our best to get back to you quickly. I will say that we're being inundated with a lot more than we've seen in the past, but we are going to get to all of your questions. So please feel free to reach out to us. We want to be a partner in this space. We're not going to be a black box. Just work with us and we will work with you.
No, I love it. And especially with all that, how busy you are right now. Thank you once again for taking the time. Expect to see more information from the back. Filtered, through Vantage. We're going to poke around on the website, and if there's tools that we think are particularly helpful for brokers, we'll be sharing them, and we'll be keeping a close eye on everything Vantage puts out, and anything that we think is especially pertinent for brokers and their consumers, we'll have in front of you. So, Tony, thank you again. You're the man. I appreciate you.
Hey, Brendan, thank you for having me. Anytime, just let me know when you want me back.
Good, hell yeah, man.